Good afternoon and welcome to this financial and professional services address. I have to say it's become a bit more nerve-wracking doing these virtual Zoom meetings these days after what happened in that American court, but I've checked carefully, can't see any animals, can't see any kitty filters, so I think we're good to go. Now, in a moment, we're going to be hearing from the Lord Mayor of the City of London, William Russell, who's going to be talking about how the city's recovering after the pandemic, the state of the financial and professional services sector, and the UK's responsibilities leading up to COP26. Then we're going to be hearing from the Governor of the Bank of England, Andrew Bailey, about his priorities and plans for his term in office, the future of regulation outside the European Union, and the role of financial services in the world economy. After his speech, there'll be an opportunity to ask the Lord Mayor and the Governor some questions. You can do this by adding your own questions to the chat box. I'm now going to hand over to the Lord Mayor and Governor, and we'll be back for the Q&A sessions a little later on.
Thank you, Martha.
Lord Mayor, over to you.
Yeah, thank you. Good afternoon and welcome to this Financial and Professional Services address. I'm delighted to be joined by the Governor of the Bank of England. Andrew, a big thank you to you and your team for all you have done to support the stability of our economy throughout the pandemic. Given that you started your term in office last March, what a first year you've had. I'm grateful for the leadership you have shown and for the way you have kept me, our policy chair, Catherine McGuinness, and city business leaders updated on all that the bank has been doing. As well as cutting interest rates, this is including offering additional funding to banks and building societies, easing requirements so that banks can lend more, and helping major employers with their cash flow. And on top of all your other efforts, could I also take this opportunity to thank the Bank of England for your support on social mobility. We are very pleased that Andy Haldane is going to co-chair the new Socio-Economic Diversity Task Force for Financial and Professional Services, commissioned by BEIS and the Treasury. The bank's support and expertise is truly appreciated. Like everyone else watching, I very much look forward to hearing about your priorities and your plans as Governor. As we gradually make progress towards a recovery from the pandemic, having started a new relationship outside the European Union, and as we host the G7 and COP26 this year, this is a moment for all of us in the financial and professional services sector to look forward. We know how important financial and professional services will be to the recovery, how the sector is one of the UK's strongest cards, an asset which we are known for around the world, and its benefits are felt across the UK. Just how much was underlined in the total tax report published by the City Corporation with PwC today. This showed that financial services firms paid a record high £75.6 billion in tax in the financial year up to March 2020. To put this into context, this is more than 10% of total government receipts from all taxes, or more than 3/4 of the education budget. For every £100 of turnover, financial services firms pay £26 in tax. And the sector has remained resilient during the pandemic, suffering a 5% drop in GVA in the second quarter of last year, compared to a 20% drop across the whole economy. Because of this, and due to the stability of employment in the sector, which switched seamlessly to delivering services from home, it is estimated that next year's figure will be between £71 and £76 billion. This underlines how UK financial and professional services remain such a robust global competitor. The City of London's latest benchmarking report shows that London is still the world's most competitive financial centre for a host of reasons. Our capacity to innovate, our international talent pool, our global connections, our business infrastructure, and crucially, our supportive regulatory environment. We do not simply excel in one area. We offer the full package. This year, we need to make sure we sustain and build up those advantages, not just safeguarding the UK's competitiveness, but enhancing it as we tackle those issues which face us. Our new position outside the EU, the recovery from the pandemic, and most importantly of all, the overarching threat of climate change. Now is the time to be entrepreneurial, to look again at how we do things, to consider how to take full advantage of our position. This emphatically does not mean pushing for sweeping deregulation and tax cuts in what has often been called the Singapore-on-Thames model, which rather misrepresents Singapore and the reasons for its success. It means continuing to improve the highly successful London-on-Thames offer we already have, recognizing that high regulatory standards are one of our biggest advantages and can continue to support innovation in areas like fintech and green finance. We will need to use the strength of our financial sector to support the economy throughout the recovery from COVID. The industry has already played a significant role supporting businesses through the pandemic and will have an even greater role to play in the recovery. As the economy opens up and the extent of the economic impact becomes clear, there is a vital role for the industry to support the recapitalization of businesses. And our financial sector can demonstrate global leadership by making sure it is a green recovery. For this, we will need our regulators and government to continue to maintain a high quality regulatory framework, to retain the openness to international business and talent, and to continue to foster innovation in order to enhance the UK's global competitiveness. We have the opportunity to streamline a regulatory regime that is a patchwork of systems which were not designed for the challenges of the future. We would like to see any redesign done holistically rather than piecemeal. Of course, the city is keen to engage with and support this process, just as the city wants to help the country to make full use of our position at G7 and COP26. This is the time to champion the global approaches we will need to solve our common international challenges. Recovery from COVID, avoiding protectionism and fragmentation, and most crucially of all, tackling climate change. I'm already very proud of the leadership the UK is showing in green finance. Our financial sector is consistently ranked as one of the most innovative when it comes to sustainability. When I speak with stakeholders from around the world, every day I hear for myself how this innovation has piqued global interest. The Bank of England was the first major central bank to put climate at the center of its analysis and is due to carry out climate stress testing later this year. And I pay tribute to Sarah Breeden for all her enduring work in this area. I was pleased to see the Chancellor's commitments during the Green Horizon Summit in November, such as mandatory climate financial disclosures, commonly known as TCFD, for listed companies, and the introduction of a green sovereign bond. We must continue that momentum in the months ahead as we follow that green brick road to Glasgow. We all have a part to play, so we can get to the point where green finance is simply called finance. This will certainly be a year of challenges, but it is also a year of opportunity for our financial and professional services to make the UK more competitive, to support the recovery from COVID, and to provide the solutions to tackle climate change. In all these areas, we are very fortunate to have the support and leadership of the Bank of England. Thank you. I would like to now hand over to Andrew.
Well, Lord Mayor, thank you for those very kind words. And thank you too for inviting me to what is of course a dressed down Mansion House event. I had to think hard about this as to what we'll be wearing this afternoon, but I'm sure old habits will come back when we all get back together again. So of course we all look forward to doing it as soon as we can. And it's actually looking forward that I want to do this afternoon, and for so many reasons, of course, we must and want to look forward. It's important, as you said, to focus on the future of financial services and the important role they play in our economy and internationally. And of course, we'll do so in the future. So that's going to be my focus today. I'm going to look forward with the benefit, though, of history and context, and set out why open financial markets are in the interests of all, home and abroad, and something we should always strive for. So I want to go back a little bit and start with the Bretton Woods Agreement towards the end of the Second World War, which was a fundamental and decisive commitment to an open world economy. At the time, that commitment did not come free. The adjustment was hard for this country, and of course, the more formal Bretton Woods system broke down in the 1970s. But that breakdown, importantly, did not compromise the commitment shared broadly across nations to an open world economy. There have been times when that commitment has been sorely tested, but it has not been abandoned. What followed the breakdown was a shift of emphasis, not a free-for-all. The shift was towards managing the consequences of greater openness, with much more emphasis on the stability of the financial system and its ability otherwise to do harm, both domestically and internationally. So what was needed was not just openness, but safe openness. And that emphasis was never more evident than during and after the global financial crisis. There was a moment at the height of the financial crisis where it might have been natural to consider forfeiting that commitment to an open financial system in the face of damaging international linkages, the propagation of the shock. But that did not happen, to our great relief. The G20 nations stood firm to the principles of Bretton Woods and committed to significantly reforming the international financial system and its regulation by raising global standards for regulating the system and reinforcing the institutional structure. The COVID crisis has been the first big test of those reforms, and it has been a big test. The scorecard to date is encouraging. It's by no means perfect, but the core of the financial system has stood up well, which I can tell you is, needless to say, a huge relief. In order to preserve this public good of an open world economy, and now also an open financial system, has required a commitment to institution building, both internationally and domestically. Bretton Woods created the IMF and the World Bank, and slightly less directly the GATT and then the WTO. Out of the financial crisis came the importance of the Global Financial Stability Board, with a mandate to promote international financial stability, underpinned by strong regulation, supervisory and other financial sector policies, reinforcing that international institution building. And the FSB works closely with and is supported by the 4 standard-setting bodies of the international financial system: the Basel Committee for Banks, IOSCO for Markets, the IAIS for Insurance, and the CPMI for Payment and Markets Infrastructure. And just to underline the importance that we see in these bodies, it's with great pride that I can say that the Bank of England chairs 2 of those 4, John Cunliffe for the CPMI and Victoria Supporter for the IAIS. And of course, as you said, this year is a very important year for the UK, with our presidency of the G7, which the Chancellor and I are really getting started this week, with the first meeting of finance ministers and central bank governors, and the COP conference later this year at Glasgow. Now, those 4 bodies that I mentioned are where the critical standards for governing the financial system get really hammered out, where safe openness is put into practice. They are very clearly global in reach, and necessarily so. They're not regional, they're global. And we cannot participate in these bodies, and they cannot function as they do, unless we are all prepared to enter into the process and listen to and accept ideas from others. It requires us to give up some control over our standards and rules, because the alternative of a narrow domestic control is illusory. It would jeopardize achieving the very things that we want: safe, open markets, and likewise open economies. So above all, these bodies enable us to build the trust that help our financial systems to stay open. But we do not for a moment believe that we can maintain the arrangements we have without change. As the world around us changes, so too do we have to adapt how we achieve these public goods. And we also do not participate in these global institutions with the intention to water them down, misguidedly, because we think this would preserve some notion of our competitiveness as a nation. as you reinforced in your remarks, Lord Mayor. The UK could not be a global financial centre for long if we did that. So let me reiterate again. The public goods of open economies, an open financial system, and the stability of that system are global, not regional in nature. The UK is one of the world's largest global financial centres, and its financial stability, as the IMF has reminded us, is therefore a global public good. We are deeply committed to financial stability, and given that, the success of our financial centre. That's not because we're mercantilist in our outlook. As the city's very long history shows, that has never been the outlook of people in the city. Rather, it has been to trade freely and compete and grow new markets, to face outwards and to innovate. And we see that today, for instance, in the embrace of fintech and the challenges of supporting climate change. So the UK's financial markets and its financial system are therefore open for trade to all who will abide by our laws and act consistent with our public policy objectives. So the question naturally then arises of what sorts of safeguards and rules should we apply to that trade? I mentioned earlier that one of the offspring of Bretton Woods was the GATT, subsequently the WTO. Now, the focus of activity in that area was for some considerable time on trade in goods, not trade in services. Both goods and services trade depend on robust standards and regulation of those standards. But trade in services is almost entirely about such standards in terms of its overall governance. This trade has been substantially supported by the global standards to which I referred earlier, and which has allowed countries to defer to each other in terms of the prevailing rules and regulations. This means deferring to the rules of others to protect our citizens or firms when they choose to do business there. There is no doubt in my mind that the work done on global standards since the financial crisis has made this process easier to support and safer and improve the level of trust we have in each other. The European Union has pursued the approach of so-called equivalence, which on the face of it allows for deferring to others where appropriate. The EU's framework of equivalence in financial services is a patchwork across many different pieces of financial services legislation, taking different forms in different subsectors, and in some not present at all. And nor do the equivalence measures prescribe how that judgment should be made. Well, as is well known, the post-Brexit equivalence process between the UK and the EU has not been straightforward. It is, of course, in fact, two distinct processes. One for the UK to recognise the EU as equivalent to the UK, and one for vice versa. The UK has granted equivalence to the EU in some areas, but the EU has not done likewise for the UK. In a few areas, involving central clearing and settlement, there has been agreement by the EU to extend temporary equivalence to the UK, recognising, I think, the clear risks to financial stability that would have arisen had this not been done at the outset. It would be reasonable to think that a common framework of global standards, combined with the common basis of the rules, since after all the UK transposed EU rules from the outset, would be enough to base equivalence on global standards. Less than this was enough when Canada, the US, Australia, Hong Kong, and Brazil were all deemed equivalent. In fact, continuing with the example of central clearing, the EU has recently made the US SEC equivalent for CCPs, subject to certain conditions. These conditions are in fact already met by UK CCPs, as they are a legal requirement in the legislation that we onshored from the EU. But equivalence beyond the temporary extension remains uncertain nonetheless. Now, the EU has argued that it must better understand how the UK intends to amend or alter the rules going forwards. This is a standard that the EU holds no other country to and would, I suspect, not agree to be held to itself. It's really hard to see beyond one or two ways of interpreting this statement, neither of which I think stands up to a lot of scrutiny. The first interpretation is that the rules should not change in the future, and to do so would be unwelcome. This is unrealistic and really inconsistent and dangerous, because inconsistent with practice, that is. Because as the world around us changes, so must the rules to accommodate those changes and to maintain safe openness. As evidence of this, we only need to look at how we as authorities have had to respond to COVID and the shock that has created for the financial system. It's been a very, very big response, one that we've had to make at pretty short notice, one that has involved a lot of international contact, and one that I think has been successfully executed over the last about a year. Now, the EU is almost constantly revising or contemplating revising its own rules, and that's a good thing. So I don't think the no change argument really stands up. The second argument is that UK rules should not change independently of those in the EU. Now, I'm being careful to phrase this point. It's not the UK rules might change independently. The equivalence process provides for reassessment of such decisions, so this should not be a problem. So it seems to be a stronger form that they should not change independently. But that is rule taking, pure and simple. And it's not acceptable when UK rules govern a system 10 times the size of UK GDP. And it's not the test up to now to assess equivalence. On this point about changing rules, it's worth just considering why we would choose to change the rules. Well, first of all, it would, I think, be rare, to say the least, if such rules turn out always to work perfectly first time and thus need no amendment. And as an illustration of this, the EU itself is looking to amend MiFID II to iron out areas that need further work. Secondly, as the world moves on, so the rules need to adapt. And if they don't, we'll be heading for trouble. So the key point here is that good practice means that authorities should be transparent at the time in explaining rule changes, and those changes should be consistent with international standards where that's appropriate. So let me give 3 examples of areas of rule changes that we in the UK are looking at. 2 involving banks, 1 life insurance. First, the Basel regime for banks has, from the outset in the 1980s, applied to so-called internationally active banks. The EU, over the years, has chosen to apply it to all banks and relevant deposit takers. That was a matter of choice. But the Basel regime is heavy duty and complicated when applied to small banks. I know, by the way, that many big banks will say the same, but I'm going to say, sorry, that's life. But we want to see if we can apply a strong but simple framework of rules for small banks that are not internationally active, as my colleague Sam Woods has said in the Mansion House. I think this is a sensible step, in my view, and not out of line with the principles and practice of equivalence. Indeed, there are other countries, such as the US and Switzerland, that have regimes for small banks those have been determined to be equivalent to the UK in many areas. Second, the EU changed its rules in December to allow software assets to count as bank capital. The Basel rules do not include intangible assets in bank capital, which would include software assets. We have not identified any evidence to support the notion that software assets have the value for banks to support their solvency in a stress. So on that basis, including them in bank capital would give a false picture of a bank's loss-absorbing capacity. So we're therefore intending to consult on plans to amend the onshore EU rule in order to maintain the previous requirements of excluding software assets from bank capital. This is in line with global standards and will enhance the safety and soundness of UK firms. The insurance case rests on a different argument. Solvency II is an all-embracing rulebook covering both general, non-life, and life insurance. In practice, it probably works better for the non-life world because the risks and activities are more common across different national markets. Non-life insurance is a broad and diverse sector, but each GI product occurs in different national markets in a more similar form. But I've never been convinced that the EU had a commonality of forms of life insurance across its national markets. There are in some cases at least quite distinct markets and products. Certainly that is the case in the UK, where annuity business is a quite specific activity. Some specific elements of Solvency II have not proved to work for the market as well as hoped, so it's right that we should review it. There may, I should say, also be reasons to change changes that span both the life and non-life world. But that's not the point I want to emphasize here. So let me be clear. None of these proposed changes mean that the UK should or will create a low regulation, high risk, anything goes financial centre and system. We have an overwhelming body of evidence that such an approach is not in our own interests, let alone anybody else's. That said, I believe we have a very bright future competing in global financial markets underpinned by strong and effective global common regulatory standards. So I just want to finish with one further important area, that is how the rules are applied, supervision as we call it, and how we can be sure that this application of rules is effective across borders, and particularly between the UK and the EU. It is, of course, critical that rules are applied effectively and that there is cooperation between the authorities in different countries. With this in mind, we already have 36 MOUs agreed between the Bank of England, PRA, and supervisors across Europe. They ensure supervisory cooperation will be deeply ingrained in the relationship through those memoranda of understanding. And let me welcome the content of the Joint Declaration on Financial Services that was contained in the UK-EU trade agreement. It provides for structural regulatory cooperation on financial services with the aim of establishing a durable and stable relationship between autonomous jurisdictions based on a shared commitment to preserve financial stability, market integrity, and the protection of investors and consumers. That cooperation itself will be supported by an MOU to be agreed by March, and this will enable discussions on how to move forward on equivalence determinations without prejudice to the unilateral and autonomous decision-making process of each side. So let me conclude. There's no doubt in my mind that an open world economy supported by an open financial system that respects the public interest objective of financial stability will bring the greatest benefits all round. It needs to be supported by effective institutions and strong international standards. But this must be a global, not a regional regime to be effective. And that is why we spend so much time and effort on the work of the global standard setting and oversight bodies. What follows from that is much more a matter of implementation and how we each put these standards into practice consistently. We have an opportunity to move forward and rebuild our economies post-COVID, supported by our financial systems. Now is not the time, in my view, to have a regional argument. Thank you.
Thank you very much indeed, Governor, for such a kind of wide-ranging, clear speech. I think there'll be obviously a lot of interest in what you had to say about equivalence. Now we're going to open up this session now to questions. Just a reminder to you all that anybody can ask a question just by using the chat function. I'm sure you're all well used to it after all the Zoom meetings we've had since last March. And I'm going to begin with our first questioner now. So if David Postings could get ready. Yes, so David is CEO of UK Finance, and good, I can see you, David. Please do ask your question.
Thank you. The question I wanted to ask was, how do you think the UK banking sector will look in 10 years' time compared to how it might have looked had we stayed in the EU?
I'm going to ask Andrew to answer this one.
Well, thank you, David. I think it's probably worth starting by saying, of course, that the biggest impact in terms of the issues that I discussed, and particularly around, spoke about equivalence, is in the wholesale markets. It's somewhat less so in the retail markets because the amount of cross-border business, even within the EU, was more limited. So I'll focus just a moment on wholesale markets and, in a sense, really pose the question back. I think, first of all, I think London will undoubtedly continue as one of the world's leading, if not the world's leading, global financial centre. And you know, interestingly, that answer doesn't just come from those of us who you may say have, you know, very sort of close interest in this matter. Many people outside this country say the same thing. I mean, Andrea Enria said it the other day, who's obviously head of the European supervisory mechanism. The question then, I think, for the 10-year view is this. We are seeing at the moment some fragmentation along a regional basis, as I saw. Most of the business of the UK banking sector is not affected by that because it's either domestic to the UK or global. But we are seeing some fragmentation, as is widely commented on, in terms of the relationship with the EU. So the 10-year question for me is that fragmentation going to persist? Or are what I would say the sensible forces of financial markets, safe openness, and open economies going to bring it back together again? And that after some period of time, there will be a realization that actually everybody is better off by going back to the principles that I set out of open economies, well regulated in the public interest. So you're probably not surprised. So if I had to entertain a guess as to where we'll be in 10 years' time, I think it's more likely that we will come back together again, and this fragmentation will prove to be temporary. And I might also add, I hope that's the case.
And Andrew, do you imagine a banking sector at the same size as it is now?
I think so, broadly, Martha, because I think we have many challenges ahead of us that need the support of the banking sector. I mean, the Lord Mayor rightly pointed to the whole question of climate change and supporting the economic change that's going to go with climate change. And it is very substantial, but I think we must also view it as an opportunity. It's both a challenge for us and an opportunity. So I think there are many challenges ahead for banks. I think we made a fundamental change to the system after the financial crisis. As I said, I think, I'm going to cross my fingers, touch wood and all that. So far in the COVID crisis, I think those reforms have amply paid off. And I think this, the banking sector is in a robust position now to go forwards.
Thank you very much for that. We're going to move on to our next questioner now, and this is Jason Bowd from RegTech Associates. He's not here with us, so I'm going to ask his question for him, and I'm going to put this one to William. What opportunities do you see for UK tech in the light of Brexit?
Thank you, Martha, and thank you, Jason, who's not here, for the question. I see a lot of opportunities. I mean, when I talk to the stakeholders around the world, they refer to the UK as very much the tech centre of Europe. And we've seen a lot of the investment that's come into that sector. Let's just take two examples. Let's take fintech. And we've got the Khalifa review coming out at some point at the end of this month, which will highlight exactly what we have been doing in fintech and what we can do to maintain our status as the fintech centre around the world. And by the way, I think as the fintech centre, it's not just London, it's very much UK. I remind people that 146 fintech companies are based in Scotland. And also, we're looking forward to the publishing of the RegTech report next month as well. And thanks to RegTech Associates and Jason's team for that collaboration. But, there's massive interest in UK tech. And I've been on virtual trips to North America, and they're very keen to invest in our tech sector. We know there's an outstanding tech company near Bristol called Graphcore, and Sequoia have a big investment in that. They have now opened an office here. We've got offices being opened in the City of London by a lot of these venture companies and private equity looking at the tech sector. So look, I think it's a great opportunity. Funnily enough, as one looks out of the Mansion House and doesn't see very many people in the city, one of the reasons why that is, apart from obviously COVID-19 and the confidence of coming back into the city, is because working from home has been so successful. And of course, Martha, you're working from home, and it's worked very well every morning on the Today programme. But we need to ensure, finally, on tech, that we shape the regulatory environment across financial and professional services to support this innovation. And that is what the regulator has done. And that is one of the major reasons, and I said in my speech, that the regulatory environment has helped so much, particularly around fintech. And by the way, it's going to help and is already helping a great deal around the green finance and green tech. And the Chancellor came up with some of his proposals around at our Green Horizon Summit in November. And that is very exciting as well. So I am optimistic about tech in this country, as you can tell.
William, thank you very much, and for your kind words about broadcasting from home. I have to say, with my flaky broadband, it doesn't always feel like that from my end. Okay, we're going to move on now to our next couple of questions. We're going to take these together because they're in a similar territory. So if I could ask Adam Jesney from Esbear Bank, CIB Limited, to get ready, and also Cindy von Nieker from Umazi. So Adam, you first of all, followed by Cindy.
Governor, Lord Mayor, thank you for this afternoon. How can we ensure post-Brexit, post leaving the EU, that we have access in the city to the best intellectual capital, the best brains that'll make us prosper going forward?
And Cindy, if you'd like to ask yours as well.
Hi, yes. Hi, sorry, Cindy here from Umazi. Thank you, Marta. The question I was going to ask is, what is the city doing to retain and maintain female-founded businesses?
Okay, as I say, kind of both related questions. Andrew, let me start with you on those questions.
Well, I'm very pleased we've got these questions because I think together they both point to some very important features of what is the success of the city and what needs to happen going forward. So I think Adam's question points to something that, of course, has been true for a very long time and needs to stay true, that the city is genuinely, as Adam says, open to the best people from around the world. It's a global financial centre, and to be a global financial centre, it has to attract a labour force from around the world that have the best brains. And of course, as Lord Mayor was saying, that's true more than ever now with the fintech revolution. I mean, the demands that places on skills, talents, and attracting those people from around the world. I think it's important, by the way, that we have an educational system that likewise supports those talents coming into this country, because an awful lot of the talent in the city, wherever it comes from in the world, has passed through the university system in this country, which does, I think, a terrific job in developing talent and supporting talent. I think Cindy poses an absolutely crucial question. Let me say, I've always worked on two principles, and I apply this to the Bank of England as well. One, we have to, as an industry and as institutions, bear a good resemblance to the society that we live in and the society that we serve. If we don't, we get out of touch. And obviously, female-founded businesses are very important in that respect. The second one is that I don't want to work in an institution and be in an industry that's entirely stocked with people like me. That's not the right way to do it. And we need that important diversity. Now, Cindy is right to say, what can we then do to retain and maintain female-founded businesses, and indeed all new businesses? There are a lot of support networks in the city. I'm actually part of one of them, which the Bank of England has led, going right back to Eddie George's time, called Heart of the City, which is involved in supporting small businesses, and is particularly interested in female-founded businesses. So I think it is incumbent on the Lord Mayor, of course, and his predecessors, and no doubt his successors, are leaders in this field in terms of getting the city not just to do its daily business, but to support all the businesses around us and support development of new businesses. So it really is critically important.
Well, let me bring in William on these questions now.
Absolutely. Thank you, Martha. So, when I talk to smaller companies, SMEs and big companies, but particularly some of the fintech companies, and there's a particular one who told me the other day that they had doubled down on London. And basically the reason for that, quite simply, was the talent was in London. The number one thing that all businesses say to me is, if London has the global talent, businesses won't leave to go and set up in other jurisdictions because the talent is here. And I think that is one of the most important things that I could stress. Look, I think government is going to be looking at immigration and skilled immigration, visas, which the City of London Corporation has written things on, reports on with EY. And I think that is something which is very important. But the other thing is, just yesterday, I launched the Culture and Commerce Task Force review, and out of the report, I mean, it set out recommendations of how we can work with commerce and continue to make London hugely attractive to live in and work in. And for me, one of the biggest differentiations of our great city is our culture and the arts. And now is, especially with COVID-19, is even more important that we come together with commerce to attract that talent coming into London. And, you know, we're going to have to adapt. I mean, you know, we're talking about the hybrid working is going to happen, what we're going to do. I think the City of London Corporation is going to have to adapt. We're doing a London Recharged. There is the London Recharged report, and then we've got a recovery task force. So we're looking at everything to try and make the City of London a wonderful place to work in, but to, as I say, to attract that talent. As far as what are we doing to retain and maintain female-founded businesses, you know, we are signatories to the Women in Finance Charter and also sponsored its annual progress review every year. But also I was on the board of Innovate Finance. Charlotte Crosswell, who's the CEO of does a huge amount of work for the fintech companies and women who have founded very successful fintech companies, and how we can help them and retain them in their businesses and encourage others. And the final thing I'd say is, as many of you know, as the Lord Mayor, you have the Lord Mayor's Appeal, and we do various programs. And one of the programs we have is through the Power of Inclusion initiative, and it's something called She Can Be, where we bring in women from a lot of them outside London, age 16 and 17-year-olds, to get a day working in businesses in the city to understand what it's about, and to be honest, women who would never thought of working in the city, but we're encouraging them and come away saying, wow, I had no idea how exciting this could be. And we know how businesses are adapting for that. But Andrew's absolutely right. I've never forgotten a wonderful YouTube video about two young girls and two young boys, and they're filling in one is filling in blue balls and other pink balls into a vase, and they all do the same, and then at the end they're given a prize, and the girls get a vase full of half amount of the sweets and the boys get the full amount of sweets. And the commentator says, do you know why you got more to the boys than the girls? And they say, oh, well, that's I've no idea. And they said, well, it's because they're girls and you're boys. And they said, no, this is not true. We're equal. We're the same. We're fair. And they took their sweets and gave them to the girls and filled their jar up. We're all equal. And the world is beginning to realize that, you know, this is absolutely critical. And various committees I'm on, inclusivity and diversity is a critical part of that. And we're moving forward, but I know that we've got a lot further to go, and we're doing what we can to make sure we get there.
Yes, thank you for that. I think there may be some more sweets that need to be shared out, but I won't interject my own views on that.
I agree, Martha. I agree. Yeah.
Well, Cindy and Adam, thank you very much for those questions. And we're going to move on to our next one now. And this is coming from Charlotte Crosswell from Innovate Finance. She sent us a question which is for the governor. And this question is, how will the bank evolve regulation to respond to the rapid uptake and demand for innovative financial products and services? Over to you, Andrew.
Yeah, it's a great question. Thanks, Charlotte. So first of all, we spend a lot of time and always have to be both aware of and respond to the innovations that are going around us. And I'm going to give an example in a moment. And I think the thing that we have to do is, first of all, obviously, understand the nature of innovation around us. And then, if you like, sort of using a sort of car repair analogy, sort of strip it down and sort of work out what the public interest objectives are that lie within it, because that's our job. Our job is to represent what has been identified by Parliament actually as the public interest. And I'll give you the example of payments and crypto assets at the moment. I participated in a lot of discussions about the technology, and it's very interesting and very important, and something that we need to understand. But what we have to understand is, in all of that, it's not our job to control the innovation, to control the technology in the sense of how it's innovating. It's to say, where's the public interest? And how do we, in a sense, give those who are innovating a clear understanding of what the public interest is, how we will put it into practice, and therefore how they can then go and innovate. Because the wrong way is to get it the other way around, to then try and sort of, in a sense, impose the public interest onto things that are well advanced. So to give you an example of payments and crypto assets, because I've been quite, quite firm about crypto assets and payments and how they don't really work. And the reason is, that I think the public interest is that when we all pay for something, we want to have certainty that the thing we use to pay for it doesn't have a volatile value. When we pay for something, we know what we're paying for, we know what we've paid, and we know it's going to maintain its value while we paid for it. And crypto assets, I don't think, satisfy that. So that's the public interest. It doesn't mean there aren't uses for them elsewhere. But as a payments regulator, as the Bank of England is, our job is to say that that's an example of the public interest. I think the public wants confidence in the value of the thing it uses to pay with. And that's what we should achieve. There may be some others as well, by the way, but that's a central thing for us. So I hope that when we can say to innovators and people in this, look, please innovate, but these are the public interest objectives that we're representing.
And do you think there is a public interest in greater regulation of cryptocurrencies?
Yes, I think there is, and I think it's beginning to happen because I think something with such volatile value has its place, and I think using them in regular payments not. I also think, if you don't mind me saying so, I mean, obviously there's been a lot of interesting activity on stock markets recently, with some shares being traded, and I think the regulator has to say, I said the other day in Parliament, we're not there, we're not there to stop everybody, using social media. But please understand, that probably the value of the underlying company hasn't changed. So we have to sort of make that sort of, in a sense, public interest warning and say, just please do understand, people may lose money at the end of this because the value of the underlying thing hasn't happened. But there is quite a lot of innovation going on around this trading.
Thank you very much. We're going to move on to some of the questions we're getting through the chat function. And this is from Dennis Petropoulos, who's chairman of the Baltic Exchange. He sent in a question for the Governor, for Andrew. He says, many large European banks appear to be withdrawing from financing fossil fuel related projects, wishing to support clean energy. Is this cynical marketing for popularity? Since clean energy can't happen overnight, should the UK's financial institutions be encouraged to support essential fossil fuel, which is clearly going to be needed while we transition to cleaner energies?
Well, we need to support transition. And that's very important. And that's why I'm not in favour of so-called taxonomies that say at a fixed point in time, something's either supportive of climate change or not. And that doesn't for a moment take away from my firm commitment that we must use all our resources and our efforts. And Lord Mac very kindly mentioned all the work Sarah Breeden is doing in the bank to support that. But it's critical that we support transition. But obviously we want to support companies that really are going to transition, not those who are, trying to sort of say they will, but just go on doing the same thing forever for as long as they can. And a big part of the UK having the presidency of the G7 this year, which we have, and the Chancellor and I are taking forward, is that I think we have a very big opportunity this year to make very big progress on this front. We were going to do it anyway. I think the change of administration in the US is going to actually really put force behind that and allow us to make progress. We're delighted by that. And one of the things we want to see is the adoption of and the requirement for standardized disclosure, which reveals the position companies in. It doesn't say you've got to be there by tomorrow, because it's not realistic for all companies. But you've got to be transparent about where you are and your commitment to get that transition done.
Arthur, I just jump in there and say I wholeheartedly agree on the transition, what Andrew has said, but also, we're all talking about building back better, building back fairer. So it has to be a just transition. Yeah. I think that's absolutely critical as well. Yes. And we do have this opportunity with COP26 to do that. And as Andrew said, I mean, the government is fully committed to that. And this is all part of the just transition, is all part of a little bit of helping with the levelling up as well. And we need to make sure that it helps everybody across the board.
No, I'm hoping and expecting that we will use our presidency of the G7 to get to COP26 at the end of this year with some real progress to show.
Interesting, thank you. We'll move on to another question now. This is for the Governor. It's from Tim Wallace, Deputy Economics Editor at the Daily Telegraph. And his question is, does the UK risk being cut off by the EU if you go ahead with reforming the rules listed in your speech?
Well, I mean, this is a very interesting question. And you know, I really, as I said in my speech, I can't really tell you where the EU is going to come out on this, but I'm afraid, you know, a world in which the EU dictates and determines what rules and standards we have in the UK, I'm afraid isn't going to work in that sense, that rule taking. So I think in a way it goes back to the answer to the first question, is the EU going to cut the UK off from itself? Of course, only from the EU. Well, you know, there are signs of the intention to do so at the moment, but I think that would be a mistake, because I think it would lead to the fragmentation of markets. Now, the problem with the fragmentation of markets is that one of the problems is that actually it raises the cost of finance for everybody, including, by the way, the citizens of the EU. It will raise the cost of doing business in the EU. So I think it's a mistake. I'm afraid I can't predict what will actually happen exactly, because obviously it's not within our control. It's probably the important part of it's not within our control. But as you probably, you know, sort of what I said, you know, I think we have to to state the argument for why it's important to have global standards, global markets, and safe openness. And if we all sign up to that, then there isn't a need to go in that direction.
And you talked about, you know, only a few areas having temporary equivalents. Do you think that
Yes.
does make it difficult for stability going forward?
Well, I mean, I think very sensibly, the areas that have got temporary equivalents were the ones that had that not been done, there would have been a real risk to financial stability. So clearing and settlement being the two points in case. What I can't tell you at the moment is what happens at the point when that temporary equivalence comes to an end. I can tell you, I think we have a sense of what the EU would like to do, but I can't tell you what will actually happen at the moment. What I will say is that I think the infrastructure capacity and markets of the UK will still be there, servicing the rest of the world in the UK. And I would hope, as I say, before long, there is a realization that the fragmentation approach is not the right thing to do.
The other thing I would add, Martha, to that is that, you know, we are global. And as I look at the green finance sector, for example, no offense to our friends in the EU, but Singapore is our greatest competitor. They're doing amazing things around green finance. And as Jez Staley made his comments, you know, we shouldn't necessarily be looking to Frankfurt and Paris. We should be looking to New York and Singapore. We've always been global. So I think it would be unfortunate if the EU didn't embrace us, because as Andrew has pointed out, I mean, the EU itself will suffer more, because I think London is more global than Frankfurt and Paris, and the fact is a fact. And so hopefully they won't do what Andrew thinks. Well, I know Andrew's not saying that that's what they'll do, but hopefully they will see the light.
Okay, and our next question is from Anthony Manchester, who's Managing Director of BlackRock, and this is for both of you. I'll begin with Andrew. What role can the UK play in helping to promote global standards looking ahead?
Oh, well, it's a great question. So let me come back to what I said. I mean, the role that we can play and do play is by fully participating in the global bodies. And as I said earlier, I mean, we do. I spent a good deal of my time in the Financial Stability Board, in the IMF. As I said, of the four global standard setting bodies, 2 are chaired by people from the Bank of England. So, you know, I think that's a very strong a piece of evidence of our commitment. My colleagues across the board are heavily involved in it. You know, I just to illustrate it, Martha, I remember about a week after the referendum, actually, in 2016, I remember saying to colleagues, the biggest mistake we can make at this point is to become isolated. So actually what we have to do is recommit, you know, our involvement, support, and work for the global bodies. And that's what we've done, because it's critical.
And William, your thoughts?
My thoughts are, we can influence hugely around the world. I'll give an example. The sandbox, which we have done from fintech, the regulatory environment we've created globally around fintech has come from us, has come from our own regulators, and that has had a big influence. And the other area is, as we run into COP26, the world is crying out for standardization. And this is also our opportunity running into COP26, is to come up with standards around climate change. When I was listening to the World Economic Forum 2 weeks ago, you could hear everyone crying out for it. There are too many different people going off in different areas. Let's come together and create a standard. And with us hosting COP26, I think we can help a great deal around that. So as Andrew says, we do this all the time, and we can help the world with it.
Thank you both very much indeed. That was our last question. I'm sorry to anybody who'd wanted to get one in, but the hour has gone by very quickly. I'm glad my creaking broadband held up to the very end. And I'll hand over back to you now, William.
Well, thank you everybody for your questions and your engagement, and a big thank you to you, Andrew, for your time today and for your typically thoughtful speech, and for all that you do to support the City of London. And many, many thanks to our excellent moderator, Martha Carney. Martha, I'm glad the broadband stayed good, and no doubt looking forward to listening to you either tomorrow morning or the next morning. But thank you all for joining us, and hopefully in the future events will be back in the traditional setting of the city before too long. And a good evening to everybody, and stay safe. Thank you.
you.